Hi everyone, welcome to Quantsapp and welcome back to yet another video. Thank you so much for joining me in this video. In this video, we will not discuss a lot about data, we will not discuss a lot about strategies which you can build in the market, but instead we will talk about the psychological mistakes that option traders do, which lead to a trading error and which lead to a losses. Okay, and these losses, by the way, they are led by trading errors instead of a big mistake in options. So now these mistakes I have jotted them down and I have articulated them, after having a word with a lot of our users who are trading options actively. So, by watching this video, if you watch this video till the very end, you will know that what you should avoid while you are trading in options market, which will eventually, cut down your losses that you might be making due to trading errors. Okay, so this is the case because options, they are one of the most interesting instruments to go ahead and trade, but at the same time we need to be a little bit cautious as well. So to start this video off, we will understand the first mistake that a lot of traders do, which is they look at the options the same way they look at the futures. They don't really focus a lot on what other things are affecting our option premiums. So talking about options, I have said this in my videos at least God knows hundreds of times. The reason I say this consistently because options, they are sensitive to time, implied volatility as well. Any movement in these, it will move your option like anything, and which will affect your PNL at the end. Now talking about options, when you buy options, there are two things what you should always know whenever you are buying options. First thing, that IV should be relatively at the lower level, so that if the IV, there is, if the mean reversion happens, so even the bought options give you benefit. Second thing what you should be very cautious about is, which is going to happen in the market for sure. Okay, even when you are watching this video, this thing is happening in the market, which is the time is going to get decayed, that is for sure. So first thing what you need to understand is, and the first mistake what a lot of people do, they completely ignore time. Okay, so for option buyers, okay, the time, okay, is your enemy, not your friend. Meaning, if you are buying options, that does not mean you will just sit the entire expiry. If exchange wants to cut your trade, let them cut it, or elsewhere, you let go your premium. You don't trade options that way. Okay, every passing day your option premium would be get decayed due to the time passing by, and which is going to happen for sure. So what you need to do, how you will fix this? So fix this by asking yourself one simple question: is there a breakout? If the answer is yes, if there is a breakout, that means the move might be very fast. Is there a reversal? Okay, if the reversal is there, the chances are the move might be a little bit slow. So in this situation, just ask yourself that, will your strategy require more than 2 to 4 days? Okay, if the answer comes that okay, the strategy will require 2 to 4 days, then probably rather than naked option buying, you should convert your naked option or a long call or a long put maybe into a bull call spread or a bear put spread. Okay, depending on what your forecast is. I have done many videos on that. You can watch those. I will post a link in the description box below. So the idea is, if you feel that the market will take more than 2 to 4 days, is something where you should start thinking about strategies that okay, you should go ahead with bull call or a bear put. Okay, a simple strategy wherein you buy a call and you sell a put. So time is not your, is your enemy, but it is not your friend. So if you are buying options, you should be very cautious about time. First question you will ask is, how much time will my forecast take to get achieved? I'm trying to at least approximate, like try to at least approximate, if not the exact days, which will save you from a lot of trading errors. Second thing is, don't let everything go. Now I have seen a lot of participants, okay, a lot of participants trading in options in such a way wherein they don't cautiously monitor the option pricing. The first, this is related with the first thing itself. So now let's say I am trying to keep it very simple. So let's say this yellow line which I'm drawing, that is my let's say my yellow line what I'm drawing, is let's say my stop loss. Okay, or let's keep red as the stop loss. So let's say this is my stop loss. This is where my stop loss is. And the yellow line which I will draw now, that is my futures. Okay, that is my underlying or futures, whatever it is. And this is how it is moving. So now on futures chart, my stop loss is not triggered, right? My stop loss is not triggered because this is where the stop loss is, and this might happen, right, in the market. But most likely is the chance that in options, my option will not behave like this, right? If I look at it on, on a slightly, on an hourly basis or maybe a 2 hourly basis, my option will not behave like this, specifically when I'm closer to expiry date. My option will keep on decaying because the time is killing that premium. And I would suggest that everybody observe this thing when you are on the expiry. The option will keep on consistently decaying, right? So maybe you are not stopped out on the futures, but for sure you have stopped out on the options, right? So what we need to do to tackle such type of situations? Not just having a stop loss on futures is enough. Always set a stop loss even on the option pricing as well, based on your own risk appetite. Okay, obviously ना नहीं तो होगा क्या? What might happen? You will be looking at futures chart, you will let go the option, and you will discover after some days or after couple of days that in options, that option has very small premium left now. Maybe let's say you bought an option at 50 rupees, you wanted to exit that option, you are ready to take a risk, let's say of only 25 rupees on that option, but you didn't monitor option. So what happened is the option, it eventually went to zero because, or maybe 5 rupees, there was very, let's say very small amount of premium left in that, due to which if you eventually ended up booking up a loss. So for that, one thing what you can do is you can use alert. You can create it on single alert over here. You can select any option you wish to, let's say 18,700. So now let's say I have bought 18,700 option. I have my future stop loss intact, but I can set my option stop loss as well over here. Let's say I bought an option at 50 rupees. I don't want to take 50, more than 25 rupees of risk than that. So what I will do is I will set a trigger that this will get triggered whenever the value goes below 25. First thing. Second thing is you can select both as well. Now let's say your target might also get achieved, right? You will not always be wrong. So let's say you want an alert above 100. Okay. Then you can select the platforms and just hit on create alert. And this alert would be created. You will get notified on Quantsapp's mobile application as well as Quantsapp's Telegram channel. Like the link, the Telegram through which you have linked your Quantsapp account with. So this is the second thing. Third thing is, whenever we talk about options, the strike selection is also important. So there are various criteria to go ahead and select a strike price for a right entry for your trade. I will just give you a few basic, understandings about strike selection. I am sure you might be knowing it already. But one of the first strike selection criteria would be, what is your conviction in the trade? Okay, what is, how much convinced you are with the trade, particular trade idea. Now the best part about options is that whenever you win, they have potential to make you win more. Whenever you lose, they have the potential to make you lose less. So what I mean by this is, when we see options delta shows us how much premium will move due to 1 point change in the underlying. The out of the money delta is 0.4, at the money delta is 0.5, in the money delta is higher than 0.5. So now let's say if your conviction is low, you can go ahead with out of the money, slightly out of the money. I'm not saying go ahead with completely very far OTMs, but if you just look at the option mechanism, so just check this out. If you have a very low conviction, 0.36, with every 1 point fall in Nifty, this option will fall by 0.36 paisa. But this option will fall by 0.65 paisa. So if you have a low conviction, that means your move might not work out. So what you should do? You should typically select a strike price which is slightly out of the money. Does that mean you should go ahead and buy this? No, there is no delta left at all. you should typically avoid it. But typically I would say 0.4, 0.45 delta strike price is something what you should prefer buying if your conviction is low. If your conviction is high, you will prefer at the money. If your conviction is very strong, prefer one strike or maximum two strikes in the money. Don't go a lot of in the monies, because you can't predict that market will always go in your favor. If market goes against you, even on in the money, the chances of losing it is very high. So if you have a very low conviction, if you just want to take a chance whether if the move works out or not, zero point 0.4, 0.45 delta is the strike price what you should pick up generally. If it is medium to high conviction, go ahead and pick up, at the money. If it is very, very high conviction, slightly go one or two strike in the money, not beyond that is what I would suggest. So now talking about another factor. So first check your conviction, and depending on conviction, select the strike price. And the another factor is liquidity. So, always whenever you are entering a trade, always look out for bid and ask spread. If the bid and ask spread is big enough, let that option go. You will find something else in the market. Okay. Always check the liquidity factor as well. And also one thing you can do is just check, which is very liquid strike while you are doing a strike selection. Let's say 0.5, 0.4 delta is not liquid. 0.38 delta happens to be really, really liquid. Go ahead with 0.38. That will not make a lot of difference, right? So this is how you will select strike selection. The last thing what I would say is that it looks very simple. Okay. Short selling. Okay. Okay. Yeah, or I'll write different way. Naked option selling. Okay. So, before I move forward, let me just write down what you need to do in the second part. Set a SL on option. Okay, you can set it target as well. 2 to 4 days for option buying. This is monthly expiry. Weekly may it would be 1 or 2 days maximum, not more than that. Naked option selling, go with the hedge. Okay. Now the reason being, so I don't really think I should explain a lot about this, but a lot of things what participants are doing these days, retail, and I believe it is these strategies, they are very lucrative, but there should be a right way to do this. So the strategies such as short straddle, short strangles, naked call selling, naked put selling, okay, it sounds simple, right? It looks simple. I only said it, right? Ki the time is something which is going to pass, that is for sure. But the problem with that is, let's say if you sold a straddle and market opens to 1.2, or yeah, let's say 2% gap up or gap down, what you will do? Your stop losses won't work, nothing will happen, right? You will lose a big chunk, you can't act a lot on that. And probably you will be taken out by the volatility as well. So if you are just getting started in options, if you are starting in options, then go ahead with strategies which give you defined risk. Okay, you will earn less, that is fine. Okay, take a little bit less money home, that is fine. So now just I'll explain you with the help of architect. So I'll go to custom strategy. I'm creating a short straddle, add a leg. Okay, and I'm creating a put option, add a leg. Okay, now see, you are earning how much? 7,200. That is your max profit if market remains exactly over here. But now see, now it is 18,200 ka level, where you will lose 14,000 rupees. And over here as well, at 19,000 level, which is 300 points roughly away from the current level, you will lose again 13,000. So you are already at a negative reward per risk. So now you know that, okay, if you are trading in options for a very big time, you know that someday there is very 1% probability that market will open directly over here. Okay, there is 1% probability that market might open either over here or either over here, either at 18,000 to 18,130, or either at 19,130. There is low probability, but the thing is, if you are trading in market for a lot of time, there is a likely chance that 1% probability might hit you someday, and that will take away the entire PNL that you have earned consistently. So yeah, if you are doing it the right way, then it is fine. But I would suggest that always go ahead with some hedges. Okay, so I have bought 18,800, or let's say 18,900 call option, or even if you say 18,800, that is also fine again. Let's say 18,800 call option I have bought it. Okay, Now you will buy a put option as well. So what I mean to say, just buy few hedges. Okay, don't go naked options, short on naked options. Those are risky. Yeah, if you do, if you know it, the systematic way of doing it, that is fine. So now see what is the harm in this strategy. See, you are making 4,800, which is less, I agree, but you're losing just 2,300, right? So try to hedge your option strategy so that the consistent profits that you have earned from the market slowly and steadily after so much of patience, don't lose out to it on a single move. At least while, when the market is getting closed, as long as you can monitor it actively, that is fine. But the when you know that you can't act on that move, at least try to hedge it there. And yes, folks, that was it from my side. These are few mistakes. I will keep on coming up with similar sort of concepts, similar sort of videos in the coming sessions. And if you like it, do let me know in the chat box. And yes, thank you so much for joining me up till your happy trading session ahead. Bye bye, take care, and be a data driven trader.